Testing one, two, three, testing. Testing, testing, one, two, three. Testing, guys. One, two, three. I think you guys can hear me, see my screen as well. Let me just make sure I am recording it. All right. Testing one, two, three. You guys can hear me loud and clear. Welcome, guys. We can actually start straight away. Okay, brilliant, Pratap. Thank you very much for that. Okay, welcome, guys. Welcome to all. I've also live streamed this on YouTube, so I'm not sure whether we will get a separate count of people out of Zoom because it's a different system, and it'll just show me later on how many have actually attended on the live what do you call that, YouTube. So welcome everyone. This is my name is Kenny Simon. I represent Erante as a market strategist. Today is the 24th of July. We're doing a bit of a special coverage on a couple of pairs, forex pairs, currency pairs that actually appears to have some formation. So as you guys can see on my screen, we have got the sharp pattern on the Euro USD weekly chart. And with this, we are actually going through a couple of students, what do you call that, troubleshooting their charts as well as their questions. So everyone who attended this webinar or is attending this webinar are welcome to ask questions at any moment of time. Okay, guys. All right. So we've been, how you guys are doing in the other group? Alfred, Pratap, you guys are okay? Any questions before we actually proceed with it? We are waiting for the rest, but we'll just continue first because we have got all good so far. Thank you, Alfred. We've just got students from the other side. You guys won't be able to see that group because Zoom is able to connect with live streaming of YouTube as well. So we do have quite a big number, I think, is attached to that. So when only after we have actually completed that, we can then see the numbers because it's live streaming. So they are able to just, I mean, the attendees are able to view it and just attend it live. So there we go. We've got a couple of pairs to actually speak about, especially with some special formations. And I have been trading the sharp pattern for quite some time. Actually, what I've done is to experiment my geometric patterns onto special patterns, especially harmonic patterns like sharp pattern, the lazy Z pattern, as well as some other patterns like the butterfly and all that, but I'm not too keen on the butterfly and various others. I like the sharp pattern and the Z pattern especially, and it has been founded by a particular guy who writes a book on sharp pattern and lazy Z pattern, and most of these harmonic patterns are founded by people in Canada, and they are actually trading it until today on the big platforms as well, and they've got very expensive software and all that they do. So here we want to look a little bit into, not a little bit, but we will look into as detailed as it can be for Euro USD, because we also look into the volume, trade, liquidity, and everything else. It does actually posted a lot of interest into Euro USD, and that has actually been since a couple of weeks, maybe a couple of months even, because especially when they have actually planned the PEPP program, and because it involved quite a number of countries, I would say the whole European bloc and also some non-European bloc involved in this PEPP program, whereby they just, print loads and loads of money to flood into the system. Hence the reason we have actually seen quite a number of other pairs have actually followed through the Euro USD as well, especially the correlated pairs. And also, there are good news and not very good news as well when we talk a little bit about Euro USD, and what's going on is very much fundamentally political and economically driven, okay, especially when we talk about Euro USD. So it's been, I think this intervention of central banks and also the ECB, which is the European Central Bank, into this much of a intervention has never actually really been in the market, even during crisis time. But because of the COVID and all that, the intervention has now gone through the banks and into the whole financial system, and hence the reason why we are getting a lot of volatility, of course, but through people I know as well, when they come into trading the Euro USD and correlated Euro USD using certain systems that they have been using for a couple of years, it has not looked that promising, because sometimes because what the people who have invented the EAs and indicators or special algorithms and all that have got to do now is they have to now adopt all the data caused by the COVID and everything else that are related, so that they can then predict the next wave and things like that. So because COVID hasn't happened, this kind of mechanics of the market hasn't happened before in the past. So that is the weak point of algorithms and the EAs and the special indicators, is that we need constant programming of latest events. Okay, so if something hasn't happened yet, it is not able to predict, but then it will use the current event to maybe predict the next one. That is possible. Okay, so they cannot predict the next, they cannot predict moves and use it as signals and all that. If we had not had a COVID, they cannot do that for the COVID. But once we have had the COVID first wave, and then you use it for the second wave when it happens, that is possible. So this is basically it. So it is quite an interesting time for trading as well. So it's quite a number of questions I'm getting on the YouTube side of it as well. So okay, that's on the other screen. So I'm trading with, I've got two screens here. So one is with what you guys are looking at the moment is the sharp pattern on the Euro USD. So it's really interesting because we've got a couple of other patterns like the cup and handle pattern as well that works best on JPY crosses for some reason. I don't know why, as well as for gold and certain commodities, a little bit on oil as well as silver as well. So hence the reason my upcoming webinars we will go into live coverage on other patterns, specifically on moves on those pattern and price pattern moves on specific patterns on specific pairs, sorry. Okay, so here for example, there's a little bit of trick in the market that is going on, which I sort of spotted where it has been encouraging a lot of buys by traders. Okay, as you can see here, we are talking about the Euro USD at this moment of time. So just to give you guys a little bit of coverage on the Euro USD, especially for those who are already trading Euro USD, floating with Euro USD, or thinking of pending order on Euro USD, this is what you guys need to know. We are at the moment trading at one point, I would say, close to the 1620 psychological level area. Okay, so it usually does Euro USD, from statistics alone, it has reversed, I would say, close to about 40% of the time, and very close to the 1620 and the 1600. So 1620 and 1600 has been the Euro USD's favorite area of reversal. Okay, closest to these psychological levels. There are 4 psychological levels that I usually trade. This is based on the last 2 digits of the price. Let's say if the price is at 4 decimal places of 1.1620, 20, the 20 at the very end is the psychological level that I will be talking about. So there are 4 sets of it. It includes 00, 20, 50, and 80. Okay, so 00, 20, 80, and 50. So we are looking at prices at this moment of time for Euro USD, sort of approaching an area where it could possibly reverse. But out of all that we are looking at, let me just go on to the weekly chart first, maybe not the weekly chart, the daily chart, to give you a little bit of an idea of a perspective from the Elliott wave. So we can then look at the Euro USD, not only from different time frames, but also from different strategies or methodologies. Okay, so from an Elliott wave perspective, we sort of have got a as you guys know, a 5-wave cycle on the Elliott wave. So you've got the first leg or first wave there. So you've got 1 and then 2, the lowest point here. And usually the third one is a little longer, and that seems to be it. But you know, we can never be sure because it's really subjective when it comes to the Elliott wave as well. I'm not an Elliott wave expert, but sometimes I'll just use it as a referral point. Okay, and here we may be able to, I think the 5 actually went missing. Let me just type that in there. Give me a second. So we don't really know where the 5 is. So what I'm expecting for things to happen is that the question is whether or not the current the current data, especially released by the European blocs on the manufacturing PMIs and all that, would encourage more upward type movement. But that upward type movement may actually then find prices to end at, not to end, but then to complete that 5-wave cycle here. So what could potentially happen is that once it is actually corrected somewhere there, let's say, then it would most probably create an ABCD, sort of like the geometric ABCD type pattern. So you've got your A here, let's say, right? And then you've got your B. Okay, mind my drawing here. I'm drawing and not writing the letters, so it's a little bit unsteady there. So here you go, right? So we don't know where roughly it would actually end in terms of the downward type movement to complete this whole wave cycle. So the whole wave basically is 1, 2, 3, 4, and then 5, and 1, 2, 3. Okay, so this is sort of a standard cycle of an Elliott wave type theory. So you've got your 1 right there, as we have seen here, then your 2 right there, then your 3, right? So the 3 that is going on the upside, okay, has actually gone down here to 4. Okay, so now we are looking at this possibility where we potentially riding the upward type movement from 4 to 5. Okay, so once 5 has actually finished or completed there, then we are expecting an ABCD to the downside. Now, how big that pattern, that ABCD is, we'll never be sure, but there are ways to actually look left, use your price action sort of strategies as well, and various other indicators that we can actually use to keep confirming between one time frame and the other. Because the thing is, when it comes to pattern as well, it might not be very clear, this whole 1, 2, 3, 4, 5 and ABCD type pattern on the Elliott wave. Maybe on a 1-hour chart you couldn't spot that very clearly, or maybe with the what do you call that, shark pattern as well, you're not able to spot it very clearly on lower time frame, but it gets even clearer on a higher time frame. So that's why it requires a little bit of work in combining not only strategies or methodologies, but also to keep track on price action, support resistance level, and all that on various time frames. So we need to combine all these, and then with that, we then use the petrol fuel. It will be fueled basically, like petrol, by the key events, data, news, and everything else. Okay, so we need this side of the technical side of it to actually just hint us of a probable route plan or action. But then whether or not this wave 4 to 5 could actually really move and really be pushed, that will then be decided or being driven most probably by key events. Okay, so now the key events are, we've got the US tension with China going on again. COVID is ongoing, of course. We've got new cases just today, I think a couple of hours ago, they've just announced news with regards to COVID in the US. Really, the cases in Texas have surged. So all these things may actually weaken and bring down the dollar a little bit. And that will then give us more room to go upwards. But then, for us who have been selling the Euro USD, we want to then know what is the game plan of when the reversal will take place. Now, the good news, of course, is that at some point, because of what I expect this wave to be, if it were to be this nice 5-cycle wave, then we are expecting the correction ABCD to the downside. Okay, but with that, we would like to really look into price action, a couple of what do you call that, touch points of prices in the past of very significant level of support and resistance and all other things. So I want to bring you through into what I see and what would I like to see in order for me to get a better idea on what prices could potentially do. Okay, so let me just erase all this drawing right here. All right, good. So there we go. So now I've talked a little bit about possibility of prices or probability of prices heading upwards, but then based on the 1, 2, 3, 4, 5 cycle of an Elliott wave, okay, before it actually completes and coming downwards in a 1, 2, 3 or ABCD type format. So with that, let me just minimize. You guys have got any questions so far? All things good? Yeah, any questions, just shoot, okay? If there's anything that while I'm speaking and it, sort of creates some curiosity in some areas or it relates to your current trade, go ahead and ask, because we we are experiencing the prices as well, a lot of volume and various others. As of today, just as a reminder, as the market actually opened both in Asia and main markets, the European markets, combination of European markets with the US market as well. And these markets combined, they're actually giving us still a lot of JPY strength. So the JPY strength started in the Asian session today. So we had loads and loads of buying, what do you call that, volume of JPY. So you've got all this safe haven. So this usually happens when the market is expecting more turmoil, let's say if it is COVID cases, if it's not COVID cases, then the US-China tension as well. So that has sort of brought in that interest of buying into safe havens, especially onto the JPY. And this is seen very early as of Asian Open today, and that is still prolonging at this moment of time. And I just want to give you guys a little heads up on what's going on with the, what do you call that, the heat map as well. And in terms of readings of which pair is sort of had a very, very steady run of whether being very bullish or very bearish. So we're still looking at USD JPY this amount of time, seemingly strongly bearish, of course. But then we have had lots of signals that are pointing into AUD JPY on the sell, GBP JPY on the sell, so Euro JPY as well on the sell. So that was sort of the volume that were started by traders late last night my time. So that's very early morning your time in Asia, and that was already seen, and that actually is prolonged even now. And usually that doesn't actually happen, because if something started in the mornings, Asian session, it usually weakens and then it change sort of the trend to allow the other trading of other currencies. But then we see that the JPY very, very steady buy is actually giving us an idea that even next week, starting from Monday, we might look into a lot of potential for combination with the JPY, especially JPY crosses, okay, or other equities that are Japan or yen correlated, or could be dominated by Japan as well. So here I see more trading opportunities, but mainly with crosses. Now, because of this is because of the case that they are putting more, and then we can look at more trading opportunities, volume, liquidity on safe havens, especially JPY. Now, JPY is your safe haven in the Asian side. The safe haven in the European side is the CHF. Now, usually if you've got some power of buying or selling through Japanese stocks or anything that has been happening, like you see that the Asian stocks actually went down, or you've got some suffering of Asian stocks, that usually is a mirror of what have actually had happened the night before or the late evening before in Wall Street. So usually what happens in Wall Street, when you see, let's say tonight's performance in Wall Street and all that, usually it gets poured out and then it will impact the Asian stocks tomorrow morning or this coming morning, late tonight. Okay. So this is how it usually works, and it works even more now because of the transfer of wealth a lot during the crisis time. And there's a lot of not only transfer of wealth, but then you've also got all this transfer of PPP money and things like that. A lot of liquidity, okay, going on. So with that, we see a lot of movements to the upside. I mean, we're looking at Euro USD still at this moment of time, and we're looking at it from the perspective of the 1 hour chart. And you can see that strength still ongoing. And hence the reason I have always been sticking to the 3 EMAs, especially the 50, the 100 and the 200 EMA, because it has been really a good indicator in terms of trend. And you can see that by how the supports have actually, huge supports have been built up across, I would say, above any one of these lines. And this is the same case of this one here. So we have had loads of higher highs and higher lows. But then at this moment of time, just now recently, during the US open about an hour ago, we found that it's creating a little bit of a sideway there, and that sideway is on the 1 hour chart. But then when we move on to the 4 hour chart, it is still a sideway in a way, and that does actually then hints us whether or not there is a possibility of a weakening, because a weakening didn't really happen on a bigger scale, but then it started happening with a selected number of candles. Okay, and then if we go on to the daily chart, you could see that still that bullishness there, but then from the last two candles as well, suddenly it gave us this how you call that, hints through candles that have got wicks at the very top. Okay, so when we look at here, for example, that movement right there, you still see that the body of the candles are on the upside, but then when you see that the candles start to have you know, more wicks to the upside, and then as it actually corrects, as it moves sideways, well, we need to look at whether or not you've got more wicks to the upside or more wicks to the downside. If in a sideway trend like this, like many candles going horizontally, and you find a lot of candles to the upside, that means it is exhausted to go upwards, and that happens vice versa. If you've got lots of candles pointing downwards, then it is you know, creating some doubt to actually move downwards. Okay, so there are doubts moving downwards if you've got a lot of wicks to the downside. So it's the same like this one here. Okay, so what I'm trying to say as well is that we need to pick different ingredients to be able to analyze the market a little bit better. So we've got your Elliott wave, for example. We've got some use of indicators, price action, geometric patterns, harmonic patterns, let's say. But it does not mean that you've got to combine all these every time you trade. It doesn't need to be like that, because sometimes, depending on the market, like now, for example, when we look into Euro USD's movement, now Euro USD is already a highly liquid trade, a highly liquid pair. Okay, and what is clear now in a highly liquid pair is our patterns. So hence the reason we want to use more patterns to actually trade Euro USD, because it's just very clear. It's just clearer to look at patterns. But then if it is unclear, then we're going to move on more into the price action, and then go into the price action, look for reversals as well, because it's not very clear. So here we still have to look at reversals on Euro USD, but on the daily chart, as I have showed you here, you are looking at 1.158, sorry, let's just look at the current price right there, 16, sorry, 1.1612 area. And I've drawn the box from 1.1580s area right up to the 1.1750s area. Okay, now here we are looking at this box as a potential reversal zone. Now, will it really happen? We don't really know. Okay, but what I can actually help you to find hints only, which are probable, what do you call that, ways to look at whether or not we may go into a reversal sooner or later, is by looking at your candles. Okay, looking at your reversal with very huge candles. So here, for example, we have got some reversal here, but then around here we have had reversal with longish candles. Okay, and we want powerful reversals, because you see, when we look into the body of the candle, the length of the body of the candle matters a lot. Okay, that is the buying or selling power that has been entered into the market at that time, and that has been reflected by a single bearish or single bullish candle. So if you've got a cluster of bodies that are really long, that actually means that has been a location where the buyers and sellers, big buyers and sellers, have actually pumped in and processed their orders at that time. Okay, so we don't want to ignore those moves. I mean, of course, it's clearer for us to look into a peak. Okay, a peak or a high or a low. But then when we look at a high or a low like this one here, even though it's not very significant, I mean, with the eyes, okay, we can see that and we say, okay, that fall was actually small. But then this is on a daily chart, so that gave us a 200, okay, 200 to 200 plus to almost 300 type movement to the downside. But for me, in my eyes, it looks like it is a strongish move to the downside, mainly because it was initiated by powerful candles to the downside. So it's the same here. This one here, for example, yeah. So this one here, we see that you've got all these little candles going sideways, but then the down boom is a single bearish candle. Okay, a single bearish candle that was very powerful at 229 pips, let's say. But what makes it even more powerful is that single bearish candle has got no wick almost at the downside. Okay, so when you see a single bearish candle that has no wick to the downside, means that it could move down a lot more, and it did. So when it went down, usually the institutional trader would actually wait for that to correct. Okay, so they use that power down there, create a support, went up, right? They would actually start selling the moment they have a signal like this, especially with a how you call that, a pin bar candle, a pin bar pattern of a candlestick, and then two candles down, one, two, and then at the end of that two candle, that's where the institutional people start selling. Okay, so that selling there took it about 300 plus pips. So that is roughly the way that these bigger ones actually trade. But then when you look at the 200 to 300 pips, when they actually trade, they could easily trade that scalping as well with the 200 and 300 type pips, meaning very big volumes, short period of time until they get or finish that 300 plus pips. So that is one way they're looking at. So I am not really interested in the way they are trading, but I'm interested in the way they're looking at the markets. Okay, so the way they look at the markets is always looking at the power and then looking at where they can actually enter. Okay, and their entry basically usually is not the same view as the retail trader. Now here we have had all these downward moves, so all these reversals, they would, you know, wallop the profits from the reversals from the what do you call that, because they wouldn't actually close their trades because they trade in huge volumes. So they would then gain again from this fall, they will gain again from all the falls, and they will just, like a casino, you know, keep taking on all the gains as well, but then they just leave their trades open, for a huge amount of time, and because they know they created that market to the downside. But they use the previous selling points of bearish candles as well, because it's created by themselves, you see. So there you go. So we are still looking at Euro USD at this moment of time. Okay. Hi guys, we've got more guys coming in. Okay, welcome. And if there's any questions, guys, feel free. You can always ask, especially if this relates to your current trade. If you've got questions have just popped up, just ask, and we can deal with that. Okay, straight away. So here, for example, it is still within the box that I sort of predict a reversal could happen anywhere between 15 1.1590s area right there, right up to your 1750s area. Okay, so that is a 150, let's say 157 pips distance within that area, because at this moment of time we are still awaiting some news as well, if I'm not mistaken, Euro news as well. Let me just check. Let's see what's going on. Yeah, especially we have got, if I could remember well, we were driven by positive PMI news, market services news in Germany's news. That driven the euro up even more, because that's the leader of the economy of the European bloc. European bloc's made up by 3 countries, but dominated by 3 economies, which are the Germany's economy, the French as well as the Italians. Okay, so here when we look into, we also had GBP was all positive. Euro news. What has driven the euro were the market PMI composite index from Germany, which was very positive. Okay, and then the euro market services, which was again very positive, hence the reason you see all that positive move. Okay, and then we had very positive news at 11:30 in the morning my time here, for Britain's market services PMI, purchase market index. So then with that, now in about 40 minutes time to about almost an hour's time, we will expect US news to come in. So what I would then look into the possibility of the reversal, not only on a technical perspective, but also on what would actually happen in the US for what is going to be released in about 1 hour's time. Okay, which are, they've got 4 blocks of news that will be released, and it concerns the market services PMI and all that. So we need to be really careful there, because they've got about 4. It also includes the US. Let me just check. You've also got the US home sales. Okay, so we've got a home sales one, which is really important. But again, sometimes, I find that in FX Street, it's very nicely tricking traders as well, because I have found this to be very interesting. Whatever that you see in FX Street, I mean, because FX Street is one of the largest portal, they've got a control over brokers as well. Brokers advertise in FX Street, but then if you look at majority, I would say, because I read FX Street all the time, but I never follow them. But if you look at all the articles are coming out really early, really consistent, but total opposite of the market. Okay, this is one from FX Street. And also, because I check the writers, the authors as well, they're mostly connected to brokers. So when they're connected to brokers and then they're not trainers themselves, active trader, then they may have a little bit of a bias to go opposite of the trader. So what actually happens is that if I check now on FX Street, purposely they have got certain economic data releases that are classified as medium or even low impact, but actually they are very high impact. Okay, so like home sales, for example, if we look into the FX Street economic calendar, that's why we've got many economic calendars. And the most important thing is that it needs to be through experience that you know that a particular data is really important, really high impact. Okay, but if you look at FX Street's data for home sales is really a very big data, especially for the US. Okay, it's released by the US Census Bureau. It measures the housing market conditions. It measures how buyers spend money on furnishing and financing their homes and all that. So this is basically where it is actually reasonably important. It is quite high impact. But then if you look into the FX tree, it is categorized under medium impact. Okay, but that is another trick. The second trick as well is that when they put everything on medium impact, and you have got quite a number of other news as well, which is the USD market services, the composite. And if you look at it, you have four news of US categorized under medium impact, but you've got four. You don't have one or two, you have four. And all four could potentially be high impact, and they have categorized it under medium impact. Okay. So then I also realized that when I see that there's huge potential of a direction of a particular pair, what happens is that FX Street starts to release all this news, and then traders will think that, wow, you know, they've got a lot of latest news. But then what you guys can actually do is look into where these news and writings come from. They come majority from brokers. So there's loads of brokers are actually competing with writing and coming out first for the news. So what I would then suggest for traders is that try reading. Yes, you can, but look into your source is very, very important. Where is your source? The source, if it's FX read only, try to also compare. If you are an avid reader or a committed follower of FX Street, let's say, or any other site, try not have it only as your one and only source for reading. Okay, especially on the fundamental side. If you can, two or three just to compare, and don't get too don't become a too hardcore fan for either one sides. You know why? Because majority of the time, all these news are content, all content are content marketing. Okay, so I've never used it to that extent. So I just want you guys to see, because we are talking about the Euro USD, and I want to help you guys to see how the news that are going to be coming out that has been categorized as medium impact are actually high impact, and they will actually come out in less than 1 hour's time. It's about 37 minutes to 50 minutes for the market manufacturing PMIs, as well as the new home sales one. And we're just talking about four data just for the US, okay, that is classified, categorized under medium impact. But in reality, we have got 4 here, 5, 6, 7, 8, 9. We've got 9 unreleased data for the US, even though the remaining 5 will be released later on and categorized in FX Read as low impact. They, because of the number of news as well, they are all going to create a lot of impact. So what I'm trying to say as well is that we will expect a lot more volatility on the Euro USD, as you can see already, because this is just on the daily chart. But then if you go onto the 30 minutes chart, for example, you can see movements. You can see that it's creating a group. See, on the 30 minutes, look at how it has actually moved, right? It has actually moved with a lot of wicks on the upside, a lot of resistance almost at the same level here. Okay, then you want to compare that to the 1 hour chart. When you look into the 1 hour chart, you still have got the higher lows, sorry, and the higher and some higher highs previously, but then again, you've got that concentrated sideways type market with a bit of a fixed level of resistance there. So let's say if I ignore that one there, that higher point, this is on the 1 hour chart, I bring this one down to this area, we have got similarity at the body, the highest body, right? We've got all these wicks jutting out. Okay, so if I take this blue, oops, not able to do that. Give me a second. Not sure why. Okay, never mind. Let me change the color. Let's say yellow, yeah, and that one there. So if we've got that one there, it is actually, oops, give me a second. You're trying to call me? Just got a missed call. Testing 1, 2, 3. You guys can hear me, right? Any issues with the sound or? Ah, yes. I've not shown. Okay, yes, you're right. That's your FX Street. So we've got FX Street there. You are right. Absolutely. Sorry about that, guys. Totally missed that one out. It's on the other screen. Okay. Yes, FX Street. That is it here. You see. So on the FX Street one, I like using it because of the filter. But then you've got all your other economic calendars having the filters as well. But here you can see that you've got your USD, as I've mentioned earlier on. You've got your USD all on medium impact. That is actually from medium to high, could be categorized as your high impact as well. Okay, let me just check the other. Yes, good question, Alfred. Yes, I was meant to share, but then I totally forgotten to drag that from the other screen to this screen that I'm doing the webinar. So, okay, but now you guys can see it, right? On the calendar, yeah, good. So there you go. So we've got all these red ones, right? Now, the thing is about the economic calendar, what it's showing is actually it's high volatility, medium volatility, or low volatility. This is what is showing here in terms of impact, okay? This is what it's for. These are what the bars for. So the red ones, full ones, are high volatility time and also high impact, okay? So when it says high impact, it's actually impacting the volatility, all right? But then look at what we're looking at now, guys, yeah? If we are looking at all these, but then our eyes are always distracted to what? To all the brokers here. Okay, so this is the other thing. So when we are actually on a chart, because you see, as traders, mostly full-time traders or traders who are really trading for a living, we have got almost no room for distraction, and all these ones here are distraction here. Okay, so how on earth are we actually going to be trading looking at the economic calendar? Definitely you guys, or maybe some other traders, would have been distracted and look at one of those logos there and say, maybe you want to check that out. And then while you check that out, the market's still moving. And how are you going to be maintaining your focus and discipline that way? So that is why I find it, okay, good and bad. We have got all these in the FX Street. FX Street is not seen as, as a broker, yes, but then their involvement with brokers has been really, really very, very big. So yeah, we are looking at all these impact here. You can see that it's a slowdown, right? It's a slowdown of all the, what do you call that? Slowdown of all the pairs, and then FX Street has actually put in all the economic data releases as low impact, especially the ending ones. Okay, all these ones are going to happen quite late, actually early mornings of Australia right there. And then we have got at 10:30 my time, 10:30 my time will be 3:30 in the morning your time in Malaysia. And you see all these ones here. So as I've mentioned earlier on, because I didn't show my screen earlier on, sorry about that. And here you can see that all these medium impact ones supposedly be high impact. Also because it's been attached to 1, 2, 3, 4, 5 others. So all these collectively is going to create a lot of impact in the market. Okay, so let's go back to the chart on Euro USD. So this is where I've stopped on the Euro USD 1 hour chart. We have got that what do you call that, a horizontal type, same level resistance there. Okay, roughly only the wicks are actually jutting out. Let's forget about this one here. So what happens is, if you were to draw, let's say we've got, okay, let's do it this way. Let's say here, maybe, let's say here, yeah. Now, if we have done this on 2 touch points, well, 3 is better usually, or the more the better. So that didn't touch. See, if I move that, that doesn't really touch, but okay, let's say make that a little smaller. Okay. Okay, let's stick to this one here, or maybe let's move it there, because there's 2 touch points anyway. So okay, let's do it this way, right? So here, this is also another pattern, okay? This is where it gets a little confusing, because we are looking at a triangle pattern. And this triangle pattern on the 1 hour chart gives me some hints that there may be a possibility of prices going to the upside. So hence the reason I want to be really careful. Okay, I don't want to say that it's a total resistant, 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 but then you see this is a pattern. A second. Yeah, brilliant, Alfred. Thank you. And then this is a triangle type pattern. So if I were to draw, let me just see whether I can change my drawings. Make it maybe yellow. Let's eraser, draw, take a line. Okay, so let's say this is the straight line here. Okay, and it goes all the way there. Then here downwards. Okay, and there. So this is a triangle with the straight line, not the slopey one, the straight line at the very top. Usually in a triangle like this, if the straight line is at the top, that means the breakout is potentially to the upside, not the potentially to the slopey side. Okay, to the upside. So this is what I am a little concerned about. I'm just not really concerned, but just looking at what angle I can look at the price moving upwards. So this is one angle that the price can move upwards, and then come back down again, and then continue to go up. Now this will actually happen a little bit more if you get 2 things. One is weaker euro news. For some reason, something come up, or stronger euro news. The other one is, secondly, is all these news that I have showed you in 1 hour's time, especially the 4 data, not news, but data releases for US. If it comes out really, really strong, then only we look at it on the downside, coming down, break this slope, but then maybe correct a little bit and then down a lot more. Okay, so usually the sell, if you want to look at it, only starts after the correction, and then you want to buy, you want to sell, sorry, once it has actually visited where it broken out, and then you want to sell. So the buy is the same. Okay, you want it to come back and then go upwards. So there you go. This is basically what I see as a possibility, because we want to look at all angles. Okay, we don't want to just hope for it to drop, but then don't see the other angle. We have to see the other angle so that we know as well. Let's say you are on a sell, you have floating, okay, and you want to you need to also know, if it does break out upwards, how much more could it actually go up to. Okay, this is very, very important, so that we can then plan in between whether to actually have some hedging type positions, or we can maintain that, and we can then check our equity as well, and then we can know a couple of things in order for us not to panic too much. Okay, because everything can actually be sort of minimized or manage your losses better. Maybe it won't go back straight to your break even and then you lose nothing, but at least you can actually lose much less. So when you lose much less and you free up the margin, you can then re-enter the market again, so that hopefully we can recover again the losses that we have done. Okay, so we want to do that. Okay, give me a second. Clear all drawings, and there we go. So now, for example, we have seen that triangle potential. Now on the what do you call that, 4-hour chart, it is sort of the same thing, okay? But this one here, we move up a little bit at the top, so that flat area is a little higher at 1620. Now, why 1620 exactly? Okay, so this is why I see that Euro USD, you know, with certain psychological level, it's always playing that psychological level to break out from, especially in bigger moves and all that, especially if you want to, you know, gain higher, make a higher high again, or even a lower low. Okay, so here we can see that that potential may be there. If it were to go upwards, break out to the upside, you need to have a game plan for that. Okay, so we want to look now to the left based on the yellow line, whether or not we have got in the past some buying interest, especially with a single bullish candlestick. Okay, so we just want to, let me just shortcut my method. Okay, we have got some here, a lot of movement here. Okay, now you see from the green line, let me just get, was it the green line or was it the yellow line? Yes, it's the green line, right? Okay, yeah, okay. I think better get rid of that one first so that we just focus on the green line. Okay, green line in the box. Okay, so I'm looking for bullish moves. Okay, and also bearish moves. Now we've got more, we've got some very bearish, I mean reasonably bearish. This is on the 4-hour chart, so we can measure that roughly from the green line down. That's about only 40, not much. Maybe we go back to the daily chart and we can use the daily chart to actually spot bullish and bearish. Now there is one bullish move right there. This is the risk I was talking about, because I've checked this on the daily chart earlier today, and this was just one of it, but they seem to have quite a number. Now this is what is important for us to realize. Let's say it doesn't go our way. Okay, we are on a sell, we were on a sell, let's say, and we want the market to go down, of course, so that it can actually reach our break even and then help us with some profits if it is possible. But if it doesn't work that way for now, we need to know what is the upward type market in order for us to do a little bit of buying as well. Okay, so here, for example, you have got from the blue, from the green, sorry, green line, right up to the end of this bullish candle closing price. That's 126 pips for a single bullish candle, which is reasonably good. So I want to mark this one here, and I want to know that this is one of the bullish movement that has happened right on the green line and above. Then I want to look at, I want to go back, you know, go to previous price action, and I want to see. So there's also a breakout from the current price now, not at the green, well, it's under the green, okay, and downwards here. I think I better get rid of that because it's confusing us. But this, we are looking at the green line that's closest to the current price anyway. So here, the downward move from the price, opening price of a downward move has gone down to 240 pips. So which one out of the two mother candles that are quite more significant, the downward move, correct? So we have got a little bit of hope to see that there are some sellers waiting under the current price, okay, and some some what do you call that? Some buyers are waiting above the green line as well. So we do have interest in both sides, but we just need to. I think the reason why we are in this moment is because it could go in both ways. It's just that it's fundamentally driven. It's also, something that is not that easy to gauge of what is going on. The market has become more and more complex now with the COVID, with the tensions of the US and China and various other things. So then we need to ride along the trend that has been happening. Okay, so now if I were to do the shortcut again, um, there you go. We've got some bullishness there, but I wonder whether the bullishness has got the single bullish candles. We've got some shorter ones there. There's another one right there. Okay. From the current price up to the end there is almost 200 pips, 196 pips. Okay, to the upside. There's another one right here from the green line upwards on average 170, 169, 170 pips. The same goes for this one here as well, 160 pips or 150. So we do have that buying power too that we need to be careful about. And you see, suddenly when I move more to the left, I found even more. So 160 pips there, you got another one there, another one there. So and another one there, but that one started earlier. So yes, I mean, in summary, we have to be careful on both sides now. Okay, and if I go onto the weekly chart, for example, I'm just looking at trend wise. We have got a very nice pattern that would definitely see more room to the downside. It's just a matter of waiting. But once that fall has taken through, then it would probably be a lot more difficult to find it reversing upwards, because once that fall has actually happened, that is an impactful fall. Now, that is mainly driven as well. Could be driven by what is going on in the European zone. Amongst all the top people in the ECB, Central Bank, Europe, and all that, they are going to be questioning the money that they have got for all the European bloc, which starts next week. So they will question that budget. They will have to, because they are now, because you see the first phase is to go and meet up and all that. All these high flung people from ECB and Merkel and everybody else have actually met, and all these big central bankers and assistants and governors, chancellors, everybody, right? So they've met and they have signed that whole agreement and all that as of this week, earlier this week, and all that. That all has happened. That was what have actually led to all this positivity in terms of news without even receiving the money yet. The money has tentatively, already been approved, basically. Okay, but then once they have received it, not they have received it, as of now itself, the budgetary have to go on. The budget will have to be going on, and it will be questioned by the opposing parties, be questioned by a lot of things in different countries, especially within the European zone. So what will then happen is next week, let's say, I have shared the FX Street just now, just for reference purposes. I just want to see what are we expecting next week. Now look at this one here. Now I want you guys to also know, if I were to look at the economic calendar for next week, I need to also include tomorrow, which is Saturday, and Sunday as well, because what happens on a Saturday, Sunday, sometimes they have meetings and they have all the important data on a Sunday, and then the market reacts to it and we don't know what happened. Okay, especially if Monday itself looks like there are no data releases, but then that is mainly because of what have had happen in the weekend. Okay, so if I were to do this, let's say July. Okay, I will always start with with Saturday itself, 25th, right to 31st. Okay, and let's say I want to choose medium impact. They don't have like medium to high. You see, that's the thing. So okay, let's say we just go to all. It's fine. So Monday is 27. Why did I do that? Advanced filter. Okay. I want medium and high. Okay, medium and high. Let's say, don't have the, okay. I think we should do it by date, 24th, 25th, and 31. Yeah, and it doesn't come out. Okay, Tuesday. Now, from Monday itself, we can do it separately on Saturday, Sunday. Let's say this week first. Tomorrow is the 25th, right? So we go down 25th, doesn't show. Go to here, 25th. Maybe because they've got nothing at all on the 25th. But don't be tricked by it though. There are times that they have, okay, that's fine. If they have nothing, it's okay. It's good. So that's why I didn't take that. Okay, so no problem. So let's say 26 to 31st, 26. I will still check though. 26. Okay, let's say next week. All right. So Monday, July 27th. Look at all the red ones as well. Yeah, we look at the red ones. We see that it will start with USD as well. Okay, good. So you see, if we have got so many and we've got high impact news today on the US dollar, and then we start the week on a Monday with again some US data releases, definitely we will have loads and loads of impact in the market, especially now today. I think it will last, until the market closes, and then Monday we will see a bigger gap as well. Okay, because it's driven by the fuel of fundamentals. So here you've got a lot more on Wednesday. Here again, you have got huge news. Federal interest rate, you got a pending home sales again. So you see, you've got the US again there. So whatever happens now, it's a really important. It's going to pace the whole, how you call that, trend for the US. So we are looking at, let's look at whether or not we have got any hints. You see the Euro USD. All I can tell you is that there's something that is driving positivity for the news that is coming. Why? Because you see that single candle right there. That single candle visually is not looking like it's very big, right? It's not looking like it's a long, very long or bullish or anything like that. This one here look really visually very, very bullish, right? Very long and strong. This one here, even though it's not, that is almost 200 pips on a single candle move, and that is moving with no wick. See the wicks as well is really short. See, really short wicks at the very top means that it can move a lot more. There's no hindrance, there's no exhaustion, there's only power, liquidity, and volatility moving the market to the upside. So we are looking at Euro USD having a lot of potential. For some reason, it's absorbing more positivity even before the how you call that, news comes out. So I just want to check. Let me check something on the and let's see, economic calendar. I just want to check on whether something has been released now or not. Okay, so here, still not yet, but no, because I'm not looking at today's, let's say Friday. Yeah, in about 12 minutes time, you will get the USD one gets released. So we just want to wait. But the home sales one will be released in about 27 minutes. The others will be released in about 10 to 12 minutes time. Okay, so it is looking like maybe we're expecting all these data to have some positivity because it is just there. Now, let us look at this blue box and look at potential reversal, or it may actually be going up, but where it would actually reverse would be at the 1750 area. So that means we still would actually have a bit of movement to the upside, at least to, let's say, okay, I'm not scaring you guys, but let's say if we have got some positivity of the Euro USD, then it may have a potential to go up to about 150 pips worst case scenario. Okay, but it's not a worst case scenario for those of you who are buying. So for those of you who are selling and you want to buy as well to hedge, that also means that you've got an opportunity of about 100 pips or so to the upside as well. Okay, so this is what we have to just be on both sides and look at what we have to do when the time comes. So we just want to also see how it fares when the news comes out as well. This is on the weekly chart that we see, and we see that the weekly chart usually gives us better data, okay, in terms of that. But of course, you know, retail wise and all that, this is the reason why retail traders on the smaller ones, especially if you trade and you want to make 10 pips, 15 pips and all that, or lower time frames like the 15 minutes, 30 minutes, or even lower time frames, they will be looking at a sell, right? But the thing is that the overall picture is a longer onto the buy, potentially. Okay, so here we see why they would actually be looking at selling a lot of resistance here, because you see on the 4-hour chart, resistance, okay? On the 1-hour chart, resistance. But this resistance would only play if we have looked at resistance as well on the weekly and the daily, but we didn't see that kind of resistance in the daily and the weekly. Hence the reason the upper time frame or the higher time frame usually rules the power of the market. Okay, that's the reason why. So there you go. This is roughly it. So on the short term, yes, you know, we've got a resistance, but it's not powerful enough for what is going on in the market at this moment of time, especially with all the economic data releases that we are expecting in about 10 minutes to 20 minutes time. Okay, so there you go. Also, let me just check something here. There's another thing as well when it comes to pattern. We've also got a J type pattern here. Okay, a J type pattern. Let me show you guys in a second here. It's called a J pattern or a hook pattern, if I'm not mistaken. Let me just show you. And usually the J type pattern, it signals more what you call that upward type movement. Okay, so let me just show you guys. There you go. Okay, so this is the J type movement. Let me just show you guys. Okay, so we have got a J. So the J basically, okay, that's your J, right? Okay, and what happens is that it will, like sendok lah in Malay, you know, you've got like a spoon, okay, and it goes up. So it keeps there, and then hook again, and then go up, and then hook again, and up. Okay, so that rounded version of the hook, something like a cup, but not complete as a cup. Cup is complete. Sendok is just a little bit. Then it goes up, and another sendok again. Okay, like a J hook, like the spoon that you use for soup. Okay, and then you can actually hang it inside so that it doesn't go away, that kind of ladle-like structure. Okay, so this is what's happening at the moment as well. Very, very clear. Okay, so this kind of hook thing, so you've got a lot of hooks. So you've got a hook, again, another hook, so that's bringing it up. But again, this hopefully, potentially could be the last type of hook if we follow the Elliott wave theory as well. That's your 4 to 5, that's your 5th wave right up there. But it's just the question is until where. So we've got a rough idea, another 100 to 150 pips, if at all, it will be driven by some positive data fueling it up. So you need to be ready. You've got another 100 to 150 pips loss, but again, if you are selling the Euro USD at this moment of time, but again, what you can then do is that if it's confirmed later on, then you see that it's going up, you can actually then open and then expect and know that you can actually open up to about 100 pips. Don't get too greedy with it, 50 pips or so. And then if you open up a buy to cushion your current selling of your Euro USD. You can even open something smaller, no, aiming at smaller pips like 30 to 50, but then your pip size is a little bit bigger, okay, than your usual one that you use. So you can do that, or you can, you know, look at your risk appetite and decide properly and still do it that way. Okay. All right, guys. Any questions at all? You guys are okay so far? See, we were just talking about Euro USD alone. Okay, good. All right, perfect, guys. Thank you. Good. All right, so there you go. Any questions? Meantime, you know, not sure about something, just ask. You can directly message me as well. Don't worry. Okay, so let's see. All right, we've got some new faces. You guys cannot see that, but I can see it on the other screen on YouTube as well. So that's quite good. Yeah, for those who've got questions, you guys can ask. Okay, I'm answering on both the Zoom as well as the YouTube. So mind me if I am late to respond on the questions on either one. All right, so Euro USD right there. GBP AUD has broken a bit of a channel right there on the daily chart. It's looking like it may have a little bit more room to go upwards, come back down, and perhaps some more. We need to look at position of AUD and GBP individually as well. Okay. Um, with gold, we talked about gold, a cup and handle. This is what we're supposed to be talking about today on the cup and handle on the gold. But then what I'm preparing is more action plan for gold. Now, not necessarily we hear all the nice news about gold going to 10,000 and all that. What are we doing for now for the traders will be very different from all the big news that is going on. So the bigger news and everything, they're, you know, promoting the idea of more gold. Of course, everybody wants gold to go up to about 10,000. A lot of news have been talking about, but when, the idea, the whole picture, the whole question is when. Okay, when will that be? So meantime, while waiting for a more solid decision of it going up, we can then look into what is happening now. So now, as you guys can see, I'm showing you the whole, it's on trading dot as well, the cup and handle pattern. This is on a weekly chart, if I'm not mistaken. Yes. So weekly chart on gold gives us a very nice rounded cup, which basically for those who are new here, I think I've mentioned that in my previous webinar. Give me a second, guys. Okay. So we have got cup pattern. Now, this is the mouth of the cup area right there. I have indicated the mouth of the cup with the two red lines right there, okay, horizontal lines. So we're expecting it to come downwards, okay. Now, usually the downward move would actually reach about 50% of from the base to the half of the cup, basically half of the cup. Yeah. So you can take your Fibonacci and you pull it from the top here, right down here. You look at your 50% and you draw that line on the 50%. And usually what happens is that it wouldn't be a straight drop down like this, of course. It will take time, it will, you know, zigzag, zigzag again, zigzag, zigzag, and then come down here and then zigzag or sideways again. And then it would actually, you know, zigzag back up again. But the idea is that the zigzag back up is not the main opportunity. The main opportunity is after it has zigzag gone up and break through the mouth of the cup, then you can see a lot more move, and maybe just potentially the move after it goes up to the cup is the same length in terms of pips as the base and down here. That is the potential usually. So that is what is aimed usually by institutional traders. Okay, so they don't mind waiting 6 months, 1 year, 2 years, no problem. So, but that is usually after it breaks out of that area. It's very close to breaking out as well from the mouth of the cup. you see. So it will, that's how it looks like, illustratively, okay. And then it will come down at the 50%, go back up again, try to break that area of the mouth, and then come back a little bit, maybe to the, and then it will shoot as high as the length will be the same, more or less the same length from the base to the mouth. Okay, so let's clear that. Okay, so the base, sorry, the mouth here down to the base, roughly, that's 8,000 plus pips. 8,000 plus. It will go through months and months, maybe years even, but then that's the whole picture of how institutional look at it at the biggest perspective. Usually they don't just trade the pattern that we see, but then they've got other methods, for example, or other ways, but then the direction that they're heading to is usually quite similar. Okay, so we can use other methods, but then it can also resemble their direction or their interest in doing what we expect them to do. They could actually be doing the same, but again, we have to follow it throughout the time as well. Okay, guys. Questions, guys? No questions at all. You guys are okay so far? It's a very pattern-oriented webinar as well, and we've got trade ideas and all that. But okay, it's good that you guys are learning that, and it's also good that we are, focusing on a pair, but then focusing on a pair with different strategies and riding it, whether it is for short-term trades, medium-term trades, or even long-term trades, so that it can then be for a different level of traders as well, whether you're beginners, intermediate or advanced. Okay, so it should actually be fitting all kind of styles and risk appetite as well. So that's why hence I need you guys to ask me if you guys any questions reflecting your type of trading. You got questions, you can ask, and then we can write the trend together. Okay, we may all have a different way of approaching risk appetite and everything, but then we are riding that current trend together at the same time. This is the most important thing. Okay. All right, weekly chart with that single mother candle here. It's already, it's appreciated. Can you believe this? On a weekly chart, it appreciated on a single mother candle at 900 plus pips, almost 1,000 pip only on that one candle for gold. Okay, we don't call it pip, sorry, but then look at the appreciative value. Okay, 700 in terms of points, 90, I think $90 or something like this. Yeah. So that's just a lot per ounce, because we're talking about per ounce 1,800. Okay, at this moment of time. So there you go. That's a lot. 90 ounce basically, I think that's what it means. So that's from a single candle with the weekly chart, that's just crazy. Okay, $90 actually, that's what I meant. Appreciated by $90. Okay, so here that's for gold. Okay. And we can see that in the 1 hour chart, it's just signaling that pin bar candle. In the 4 hour chart, the same, but then all the lines are giving us very, very strong upward movement. Let's look at average directional movement index a little bit on the strength of the market, strength of the trend, sorry. Here you can see it's all above, okay, from 1 hour chart. Except for the 1 hour, sorry, it's that's why we may have a bit of a reversal telling us, okay, reversal in the 1 hour, but maybe we've got to wait and see, because then 4 hour and daily seem to be giving us a lot more potential to go up more. So maybe we will expect a little bit of correction for the, closing of the week and then the weekend and all that. And we just need to monitor it on Monday. But again, on Monday, as I mentioned, on Tuesday onwards, we've got lots of expected US data, and also by Monday we should be able to hear more news about the current US-China tension as well, and then we'll take it from there and see what happens. Okay. All right. Any questions, guys? You guys got any questions about your current trades? Anything at all? No questions? Ready for the weekend already? Yeah. All right. Good one. Okay, Pratap, we'll look at GBP JPY. Yeah, of course. No problems. You guys just have to shoot me with the trades and things that you guys want to take a look at, so we can look at it live, because the market's going to move a lot more with all these expected US data coming out as well. So yes, it's probably the best chances that we have to look at it move with fundamentals. So let's look at that. Oops. Okay. Change that. GBP. Euro, okay, Euro JPY, AUD JPY for a bit. Let's look at GBP JPY and then the other crosses, okay? Euro JPY and AUD JPY. GBP JPY first, let's see. Oh, it's up there, I think. Yep, okay. So GBP JPY, I'll just lay out AUD JPY here. I don't have Euro JPY, GBP JPY here. Okay, so GBP JPY, what's going on? Let's just check that. Okay, at a glance, 4-hour itself, you can see that the power is to the downside, zigzagging downwards. Okay, just at a glance. The same goes for the 1-hour, 4-hour. We can link it in. Also, as we see it here, it's trading at 13507, 1350708, like that. Probably looking at a touch ground at 135.00 psychological level area. So previous close to some previous resistance, as you can see here, which could turn out to be support now or even go upwards. But then the most important thing is the trend. So let's look at the daily chart. It is on a bit of a sideway now. I mean, it is actually moving towards the downside. We've got a bit more participant that are actually selling it. But again, for more clarity, I would prefer for it to break this trend line here. Notice how I draw my trend line. I don't draw the trend line from week to week, yeah, because it's a weak approach, okay, to draw the trend line from week to week. So it's better if you've got more bodies touch is better, okay. And then we have got a bit of a nice sort of, we call it symmetrical type triangle. Okay, so symmetrical triangle usually tells us continuation of trend. Continuation of trend, if you look at it here, you've got, higher high, higher lows here, higher high, but then that one went downward. So predominant trend at this moment of time is a bit unclear. So we need this to go to the sideway at, until it breaks out. But then if you look into, just from looking at it at a glance itself, we have bullish mother candle there, bullish mother candle there as well. So we need to wait a little bit. Let's see. And if I go on to the weekly chart as well, looks like it's heading a bit lower. What about the 4-hour chart? It seemed to be breaking through the what do you call that, moving averages as well. If it wants to buy, will buy low at that area right there. We have concentrated 3 touch points, 4 touch points, further up around here as well, and then it mirrors all these resistance as well. So maybe an important area to look at here. Okay, follow this yellow line, you will see whether or not it's significant. Quite significant, reasonably significant. Okay. Right. So it's GBP JPY. So this could potentially be a strong downward movement, mainly because current interest is on the buy for JPY, and then GBP is looking very bearish. So the downward, so the bias is to the downside more than the upside for GBP JPY. Okay. So here, for example, we could see that you've got the end of the candle here roughly of that bearish candle right there. We have got some support at the at where it is on the yellow line. So here from the current price to the closing price of that bearish candle is already 100 pips. So that means you've got a anywhere between 70 to 100 pips to make potentially if you're looking at the downside for now. But then it's a risk, of course. But looking at powerful candles, we do have powerful candles, bearish candles at where the current price is, but it's probably better to always check, double check, go back to the left, and you can see another bearish candle right there, another one there. You see, it's actually quite the same level as well on the bearish candle, and another one right there, and another one there. Yep, that long one there finished there as well, and another one there. We've got quite a number, so it's a good sign for more selling to take place. Let's see, lower time frame. Yep, it's on the downside. 1 hour chart as well. We got ADX to the upside. That appears strong, but yeah, downward type movement appears strong at the moment. We have got current price on 4 hour chart exactly on that bearish candle right there, and that one there can take it down to the closing price of that bearish candle, bearish mother candle at 36 plus pips. So yes, we do have some areas there. Of course, if it does actually break this trend line on the 4 hour chart, break, go back up again, come back down, then you can see this area here. Another, okay, if it is following here, down here, that is about 100 pips down. So see that red line slope and that red line slope, that's about 100 pips, the same as the candle that we have seen just now, the bearish single mother candles as well. So yes, you have, but you want to look into 134.90 to actually sell, or you want to be more conservative, you want to wait a little bit more to have more impact, then you can sell at 134.70. So it's either 134.90 or 134.70, and then you want to exit at 134.10 at least. Okay, so there you go. That's for GBP JPY. So we'll move next to the Euro JPY. Okay, is that okay for you, Pratap? Yeah, is that clear? Any other questions on that? Euro JPY AUD. Oh, good. Okay, let's look at Euro JPY as well. Euro JPY. There we go. After the Euro JPY, then we look at the AUD JPY alpha. Yeah. Euro JPY, as you can see, it is looking to the downside, mainly because of the strength still persists for the JPY on the upside. So that's why the euro is on the downside there. But look at this, it's really interesting. This is on the daily chart. You've got a standalone resistance there already anyway. If you have looked at that earlier on, you would have already expected a potential drop. So now that drop will go following, and most probably following that body's length there at total is 139 pips, but then from now where it is dropping to the closing price is another about 30 to 40 pips to make there, okay, on the sell side, right? So this is what's happening right now. It's happening really, really strong. Let us go to the on the economic calendar. Let me just see whether we got some results there. just to check on the just to check on what happened with the US data. Okay, give me a second, guys. Right. Oh, we've got just 1 minute left. Right, 1 minute left for the home sales, I think. Oh, is it 1 hour, 1 minute? No, 4:45. It's already done. Yeah. So the this is it. The USD the two service PMI thing released negative. Okay, so let me just check. Is it really? It's negative, but not far away. So it could potentially be positive. All right. So it's negative, but it's only 1-2 points away. So it's not really considered very, very drastic negative. So it is still good. It's probably marinated in the market or converted in the market as slightly positive, actually, even though the numbers are negative, because it's not very big difference. So now we are waiting for the new home sales as well. So let's wait a little bit. So I want to also new home sales. Let's see. New home sales. Mm-mm-mm. I'll check the Guardian. I think sometimes, you have got it live news there. Let's check the, okay. All right, there you go. So we have got very good news with the new home sales for US, which means that US on the upside. Both data very positive, very, it's like zero point 0.7 million more home sales, which is very positive. And then the new home sales in percentage, it was expected at, let me check. It was expected only at 4%, but then it came out at 13.8%. So for those of you guys who are selling the Euro USD, good news, Alfred. So we are looking into more selling pressure. Okay, you can breathe a little bit on the selling side. For those who are selling already the Euro USD, we wanted the Euro USD to come down. So with that, with what has actually happened with the home sales, it is encouraging that. It is encouraging more falling of the Euro. So shall we then look at Euro USD? Okay, it's not yet reflected that so much, but it's already reflected that on Euro JPY. Okay, so that's not too bad. So we've got a lot of positivity on the USD. So let's hope that one there as well. So the good news as well is that it hasn't really, gone very far in within that blue box, which is a good thing. It's closer to the borderline here, which is also a very good thing, which means that it's got higher likelihood there. So this J might actually end somewhere quite close, and then we will see what happens after that. Okay, but overall, we've got more positive US data, and I think if the oil rig count as well is positive, and all the other ones, we've got another 5 more data, which is on the medium to low actually impact. But again, because of so many data releases, it will all add up together to create more fuel for the market to react on the US dollar. Okay. All right. Okay, guys, any more questions? You guys are okay? That's for Euro JPY just now there. Now AUD JPY also looking like it's on the downside at this moment of time. Yeah, it's got a double type top here, but I don't like the shape of that. It's not a very nice V. If it's a very nice V, then you have got like twin towers. It needs to look like a twin tower for a double top. Okay, so you've got, let's say, market moving up, moving up, moving up, and then start to do that, and then up there. Okay, and then that is a nice a double top, almost the same level. A little shorter one is okay, but then the shape, the V, this is the V. The sharper it is, the bigger this is. usually nice and easy. Okay, then people draw usually the trend line there, yeah, following this, then that's the area, more momentum, more selling there. That's how it works usually. Okay, so there you go, that's your double top pattern. All right, and also of course in within the double top, in within the, sorry, while you're selling, of course you have got the ABCD, 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 ABCD. Okay, that's how we trade that. All right, guys, I think that's all I have for you guys. Any questions at all? You guys are okay so far? Good. Okay, GBP second entry with downward movement, 28 pips hit TP, Alfred, brilliant, well done. And then your second, you've got second entry. Okay, perfect, good. Very good, very good. You see, it's nice to actually ride a very strong trend. We do have very strong trends, mainly because of what's happening in the market. We do have loads of very big risk events together with data releases, a lot of tensions going on. We've got also hurricane warning that might impact the WTI, what do you call that, oil barrels movement as well in Texas. So yes, we do have loads and loads of things are going on. And then we had Japan's public holiday yesterday, sports day, whatever. But then, you know, the Japanese are really smart. They like to use holidays to reset the market and stuff like that, prepare the market for safe havens buying and all this kind of stuff. So hence the reason we have seen the JPY increased its value quite a lot. So sometimes it's not 100% based on just economic news and stuff like that. It's also got to do with how the big banks, institutions, government are balancing their books as well. They have to do things that are best for their country, their movement and flow of money in within their country. Okay, so there you go. Good. Hope you guys enjoyed today's session. We will meet again on Monday. I'll try whether I can do some videos, you know, like a brief one on a Sunday or something, so we can prepare and send you guys video to look at what I've seen in the market or something like that. But if no promises on that one, because in the weekends, you know, it's quite crazy for me with a newborn baby and all that. But I'll try if I can, and I've got some minutes to spare out of the cryings and all that of the baby, then I will definitely do it. If not, then we'll meet as usual from Monday onwards, you know, during our webinar. Okay, guys. All right. Okay, guys. Okay, very good. You guys are most welcome. Now, enjoy your weekend. Take it easy. We'll plan forward again, so don't worry. Okay, guys. Take care. Enjoy your weekend. Bye-bye.